Hey everybody, welcome back to another installment of Credit Union of America Friendly Home Loan Videos. Today I've got a special guest with me, Caleb Claussen, member of the Claussen team here in Wichita, Kansas of ReeceNichols. And today we're going to try to put together a presentation for you about the 2024 housing market outlook. I know that's going to be important to a lot of you. We're going to try to talk about overview, trends in the market, interest rate predictions, as well as just some tips if you're wanting to enter the market either as a buyer or a seller this year. Caleb, thanks for joining us.
Yeah, thanks so much for having me. This is cool.
So when it comes to the real estate side, how long have you been an agent working on contracts and whatnot?
Yeah, actually working on contracts like for my clients about 3 years. Before that, I was working in the corporate world as an engineer, buying rental property. And so I got in it just doing investment type stuff. I'm a big numbers guy. But yeah, actually representing buyers and sellers and investors about 3 years.
Okay. I'm glad because I've been originating for about that same time, 2.5, 3 years. I did process for a while. And I think a lot of the viewers here today are going to find that we're going to go over some things and it's going to sound like it's been pretty crazy. I don't think you and I have had a chance to see a normal market at all since we've been doing this. And it sounds like we might see some normal, but it might be around just for a short period. So do you have any thoughts on what to expect with the housing market in 2024 as a buyer and as kind of volume looks at?
Yeah, I mean, overall 2024, I don't expect a ton of crazy surprises, especially in the greater Wichita area market. Yeah, nationally, we might see some stuff, but Wichita, I think we see similar trends as we've seen the last couple of years, just less dramatic. But right now, we're in the winter months, and so just a typical winter cycle, things slow down, and then they start to speed up again come spring. So that's what I'm expecting. That's what I'm telling my folks to expect, but time will tell.
Awesome. And I know a lot of agents and lenders alike over the last few years going through the pandemic rates, going through a historically high rate increase that we saw over the last year, we've had to get very creative. Do you see a lot of that creativity in contracts still present, such as contingency offers, contingency sales, or extra clauses in there that might be out of the norm?
Yeah, I would say once we've reached the peak of interest rates towards the end of last year, people being willing to work with contingent offers and contracts was a lot more common. That will probably be less of the situation come spring, just as there's more buyers in the market looking for things. As far as having to get really creative, it just depends on the house and the price range. The overall market is good, but segmented in the market, there's different price ranges. You know, if you're in the first-time home buyer price range, where there's a lot more activity going on than $1 million plus, then you see different things. So I've seen homes that still get today, multiple offers, multiple contracts, going and fighting for things. And then in those scenarios, you got to get creative on how you're gonna win it over the other ones. But I would say, yeah, kind of expecting a similar trend to recent years, but not as dramatic.
Do you still see a lot of homes that buyers are needing to offer list price or even higher to secure the contract? And do you see that trend continuing throughout 2024?
Yeah, again, that depends on the price range you're looking in. 300 and down is a lot more competitive than above. But you can see that in the numbers if you look at the average days on the market, how many offers those homes get versus on average, of course, the ones above that. So it really just depends. It totally depends. It depends on the house, how desirable it is, where it's at, how well it's priced and marketed and all that good stuff. As far as having to continue to offer over list price, I haven't seen that be a huge issue on the majority of homes. On the homes it is, those are more outliers today. And a couple of years ago, you would see offers of $5,000, $10,000, $20,000 over the list price.
Oh yeah.
And now it's less dramatic. If it's priced right, it might go a little bit over if it's competitive. I'm not seeing things go quite as crazy unless they just priced it weird for some reason.
And I know that's a big part of the affordability challenges in this market. And when buyers come to you, what kind of data are you pulling from, or how do you advise them on what a fair offer might be? Because I know on the lending side of the fence, if they do that $20,000 over asking price, then we might have the appraisal challenges that present themselves throughout the loan.
Yeah, there's a lot to it. You can't just offer anything and it work out unless you're paying cash. But as far as affordability, the Wichita market is one of the most affordable markets in the country. If I was in other markets around the country, I might be more concerned about affordability. Although it is at affordability is an all-time low as far as what you can buy for the payment. Wichita is a great market. You're trying to get more affordable. But yeah, you don't have to go super crazy. Like I said, it is super situational on the home. We still see things moving quickly and for more than their list price. But a large problem that we're seeing is there is still limited inventory. And with the lower rates, a lot of people rebought their home basically with a 3% rate. And so now they feel like they're stuck in that and don't want to move up to the next home on a higher rate. At the end of the day, people still move for reasons that are not financial. It's for family reasons, upsizing, downsizing, bigger family, smaller family, job changes, all sorts of things that people will continue to move regardless of what the rates are.
Oh yeah. Well, as I was looking through the rate forecast for this year, it sounds like good things are ahead. I know everybody in our industry is always optimistic, but as we get closer to a normal level for the Fed's target rate for inflation, we're going to continue to see dips in the rate this year. A lot of housing market forecasts were actually produced in Q3 of 2023 for this calendar year. And I saw some of them were predicting rates to get 6.5%, 6%, 5.5%. Oddly enough, I pulled up our rates this morning, our 30-year fixed rates down to 6.5% already. So with that paired with the Fed's committing to decreasing the rates from the sounds of it, I think we might see a little bit of relief from that pressure of people feeling stuck and getting more inventory out there to maybe help that affordability issue that we're having.
For sure. Yeah, it'll be interesting to see what the rates actually do.
Correct.
Even in the last year, we expected them to do different things than what actually happened. So as far as rates, I never promised that they're going to go down or do anything. I personally see them, staying rather stagnant, maybe going down a little bit, but trying to estimate and guess what the Fed will do, that's a tough thing to do. But lower rates, like I said, not everyone's moving just because of rate. Well, very few are. When the rates were so low that you could just move for fun because the money was cheap, that's not the situation. And that's not been the situation in the housing market almost ever. So, it's going to be a lot more of a normal market where people are moving because they need to, or they've got a good reason to do.
And I know I'm looking forward to some normal in our lives, but you brought up a great point. The rate's near impossible to predict. I know that's a question I always get as buyers. Okay, when's the right time to lock in? When should I do it? Are they going to go down? Are they going to go up? I wish I had the crystal ball to predict that, but I think as you look in the environment and trust your lender, your agent, the content of what they're giving you in the market and what to expect as far as buying a house, whether it be the inventory, whether it be the rates that are there present that day. I think the content of what's going to affect the housing market, the loan prices, the interest rate, that's more important with these forecasts, not so much where they say the rates will go, because it truly is a crapshoot. To combat the affordability challenges that we see in this market, we've got that adjustable rate mortgage program where we've got the low interest rate up front locked in for 5 or 7 years. And then it can adjust once per year by a maximum of 2% after that. That's one way that we have to combat the affordability. And to take it a step further, we've got a conversion feature that will allow borrowers to keep that rate low after their 12th payment. If rates do drop and they don't want to go through the whole rigmarole of refinancing again, paying closing costs, they simply pay us that 1% fee, drop the rate. On the flip side of that, for the borrowers that are maybe strapped for more down payment, or as we get back to those contingency offers, want to buy now, sell later, we've got our 100% financing program where obviously if they qualify for both house payments, we'll finance up to 100% of their purchase. And then you do your job and sell the house later on. They bring any and all proceeds that they want to the new home, and we'll re-amortize that for just simply a $150 fee. So that's one way that I'm proud of, that we have to offer those affordability, those creative products for affordability here at CUA, because I mean, that's most of what I'm working on lately, just because of those challenges we see in the market.
Yeah, and it's good to have those tools in your tool belt. Not everyone's going to use all of them, but to have the option. And of course, it's the decision between your loan officer, your real estate agent, other stakeholders, just on your comfort level of doing those types of things. Over the long term, we see real estate appreciating at a steady state versus other areas of the country, like I've touched on a little bit before. We don't see these big swings in prices like other places do. We're a lot more steady and consistent. So overall, real estate will likely appreciate and go up. So if you wait to buy real estate, the price you pay will go up. Whether the rate goes up or down might change, but the price you pay goes up. Ultimately, I tell my people that I'm representing that you need to buy based on what you can afford, what you're comfortable paying, and when it's the right time to buy a house. Not so much trying to time the market of, trying to get the lowest rate or get the best deal on the house.
Market trends going into what we're seeing in 2024. I mean, we obviously think the appreciation is going to continue. We've touched on pricing kind of depending on your price range, might continue to increase, might continue to have bidding wars. Are there any other trends that you're looking out for preparing buyers for in the market this year?
There's nothing in the data that really sticks out at the moment. If you look at our Wichita market stats, the Wichita market's doing what the Wichita market does every year. You know, we see more sales happening at higher prices in the summer months, and then we see less sales happening at lower prices in the winter months because no one wants to move on Christmas and when there's snow on the ground. So there's really nothing that really sticks out as being concerning, but we get those stats on a month-by-month basis about a month after the last month closes. So something to keep an eye on. You can try to see the trends and predict a little bit what's going to happen, but right now there's really nothing notable that would change my decision to buy or sell right.
And that kind of holds true with what I've been seeing in some of these forecasts. It seems like the volume of sales, transactions, closings is just going to be kind of flat for us this year. While that might not be the worst thing in the world, I think normal is good when it comes to real estate markets.
Yeah, I'm looking forward to more normal. You know, having to rush to properties, make rush decisions, and pay more than you're comfortable with, and the blink of an eye is not something I like putting my clients through, but may have been what was necessary in the past to buy a home. But no, yeah, in the last 3 years, each year has ticked down a little bit in the total number of home sales, with the rates ticking up, which was expected and the intended thing from the Fed increasing the rates. So yeah, I think it'll be a good market. I think it'll still be, you know, one of the better years overall for home sales. We have a big supply-demand problem that we're working to solve, but I think it'll be a good year overall.
And when it comes to trends we've seen in recent years, short term, I know wife and I bought during the pandemic, and basically if you were asking for inspections, you might not even get your offer reviewed. Are you seeing a lot more buyers having the ability to ask for inspections, negotiate repairs? And when that comes up, what's your general advice to them throughout that process as far as how aggressive to be?
Yeah, that is, like I said, that's all situational about how competitive a property is. I would never just go out of the gate offering all these things for the seller if it's not competitive. So you gotta have an agent that can figure out the situation, what's going on. When those things do happen, I would always recommend you get a home inspection, have some kind of out. You don't wanna be as is no matter what. And there's ways to do that and still make your offer attractive. But I see that happening a lot less. It'd probably be more common come this spring. Truthfully, and like I said, and the price range. Just depends on what price range you're in and how many other people want that house.
And when it comes to gauging the situation, this is just from my perspective as a lender, but you'll be able to touch on this. A lot of that kind of just comes up in your conversation with the listing agent often, doesn't it?
Yeah, you can find out a lot by just communicating with the listing agent, figuring out what's important to your sellers. Everyone wants more money for their home. That is a constant across all price ranges, but there's other things you can do. And then sometimes just, you know, having a personal connection with the people on the other end makes a difference. You know, following all the rules and regulations, of course, but, you know, better than just like text and sending over a contract and see what happens.
And I'm glad you touched on the connection, because I know a lot of what we do now, I mean, you're looking at a lot of data, there's AI out there. We can get a lot of help with technology on the loan side to speed up the process, on your side to help just solidify the offers. But I feel that we're kind of going back into a territory where me with my buyers, you with your buyers, and then all of us in the industry, the relationships are really going to matter throughout this year. Just getting back to normal. We've got the inventory challenges, and I think having a clear line of communication with all parties involved should help transition smoothly into a normal market and get us off of what we've seen these last handful of years.
Yeah, absolutely. There's a lot of cool tools out there, and they're really great for different purposes. But luckily for you and I in job security, this is a very relational business, and every deal is just a little bit different. No houses are the same. There's always something to work through and serve our clients through.
So just to segue into our last topic that we wanted to talk about, we want to give the viewers today some tips going into this year. I'm going to be no help to anybody wanting to enter the sales market. So if somebody was coming to you to ask to sell their home this year, what's that conversation look like, and what advice would you give somebody entering the market as a seller?
Yeah, as a seller, you know, if it's up to you and you can sell whenever, you know, sell when it's generally warmer outside and there's more people willing to go look at houses. There's a million things you can do to improve the marketability of your home, like decluttering and doing necessary repairs, trying to give yourself the best negotiating position possible once you eventually get under contract. Of course, it matters who you hire as your real estate agent. One that has a strong marketing presence as well as digital marketing. That's becoming more and more prevalent. I think it's 90+ people find the home they are going to buy online, so they need to be up with the times on the internet marketing. But those would be the main things I would connect. Likely if you're selling, you might be buying, and so if you're getting a loan to purchase your next home, do that during this process. I wouldn't get your home under contract and then figure out what we're going to do financing wise. So connecting with a lender, connecting with a good real estate agent, and they should be able to guide you on the next steps. There's 1,001 things to do, but those would be the two key things that will make the biggest difference.
And then on the flip side of that equation, if it was a buyer, whether it be first-time buyer or that seller that wants to enter the market as a buyer as well, how do you approach that conversation? Do you want to get them with the lender immediately? Do you have conversations with them up front? Kind of where does that start?
Yeah, I tell them that is the first step. I can go show you houses, but it could be a waste of time, and it could be a good way to get your feelings hurt if we look at a house and then you find the perfect one, and then you can't write an offer because you don't have your pre-approval letter or some kind of amount of financing figured out. So it's best to do it, absolutely best to do it first. So you know what you're working with, if there's anything you need to clean up as far as your credit or how much funds you gotta save up for. And it makes a huge difference, especially when you're negotiating a contract, working with like a good local lender like C of A versus some other ones. It might make a difference.
Oh yeah. And I'm glad you touched on taking care of your finances first, because from the lender's perspective, that's music to my ears. I mean, we want our buyers to be as qualified as they can be. We understand everyone's situation is different, but the important things that I'm going to look at on my side of the fence, obviously, is your credit score, down payment funds and closing costs for the house, and then also your income to see if it supports not only the house payment, but also any other debts and obligations that you have. I always ask the people that hit my desk for their own personal budget. That way I know I can stay in bounds with what they're comfortable with, and I don't take them to the max automatically and put them in harm's way. But yeah, and then I also encourage every buyer to shop with other lenders too. I know that sounds a little bit odd, but getting as much information as you can this year as a buyer, I think, is important, because we see all these lenders bringing these creative products and these creative ways to do things back into the market, like the revival of adjustable rates, different things like that. So seeking out information and finding a lender that's going to educate you along with the real estate agent that you choose, I think is going to help set buyers and sellers in this market, far and above others that just kind of go to those other non-local people.
Yeah, absolutely. Yeah, and there's 1,001 lenders and there's 1,001 loan products, but they're not all good. They've got different levels of risk depending on what you're doing, but working with a good, reputable local lender makes the biggest difference. As far as like when I'm listing a home and I'm advising my seller on, I've worked with Credit Union of America before, we're going to be okay. Versus I've worked with some of these others and take it at as your own risk,
Oh yeah. Well, Caleb, I appreciate you joining us today. Thanks for sharing your insight on the real estate side of things. I know it's ever evolving. Some of this stuff might change throughout the year and morph, but generally the meat of the information that we're giving you today is going to hold true in this market, in any market. But we appreciate everybody viewer here tuning into another episode of the Friendly Home Loans. If you found this content helpful, please share, like, hit the notification bell to subscribe. We'll have some of Caleb's information linked in the below. That way you guys can reach out to him if you're looking for an agent this year. And just reach out to us if you think of anything we can do to help you.
Yeah, appreciate it.
Yeah, thanks, Caleb.